Trade Day Academy. Yay!
Okay, awesome. So today is going to be a full training session where we're going to talk about, more of the concepts, more of the strategy, and how we really find liquidity. Okay. Liquidity is very important for us as we can use it for a confluence for whatever direction that we're going for, either upside, downside, um, and we can use that as potential targets, or just maybe just waiting for price to sweep out of lows or highs, or whatever the case it is here. So the topic for this is that we're going to do the three-step process, which is, remember, three boxes, right? And in these three boxes, remember, we find the structure first. All right, that's always going to be the first step. Okay, structure is going to be the number one. The second step on what you should be looking for is your supply or demand zone, right? So number one, structure; number two, supply demand zone; and now number three is your confirmation. Remember, this is like what we do every single day and how we can find opportunities in the market. So you can do this swing trading, you can do this day trading, you can do this scalping, you can do this on those very lower time frames, like a 5 second chart, 1 second chart, whatever the case is. So this is basically the strategy in this academy and how we have been, using this for years. So structure, supply and demand zone, and confirmation. But now you have other things that you can use and apply into this system, right? Because this right here is the full system. But now within that system, you can now use liquidity concepts. You can use, some people call it like FVGs, or you could just say like some sort of like imbalance, right? And imbalance just stands for like areas where you've seen like crazy drops, crazy impulse moves, and you can just even call it just a gap, right? Just something like this. So number one is the liquidity, right? Liquidity. And then all this right here is just basically areas where it just dropped very hard, and it's kind of like we could just say unhealthy, right? Let's just say that unhealthy movements. And who here has seen a gap or a massive drop in the markets? Raise your hand or say me or yes. Has anyone seen on the charts or on a market where the market has just dropped very hard? I believe we all have seen those drops, right? Or we've seen like pump ups to the upside. So so what we're going to be going over today is how we can use the system, but also when you're using the system, you can use these for like PTs. You can use it for patience, and you could do it just like extra or something. Let me just extra confirmations, right? Just like that, extra confirmations. So, how does one, two, and three look like though? One, two, and three looks like this. Find the area where you've seen a pump, right? And wherever you've seen that pump, that's where you want to see, did it break the previous high? The previous high would be like right here, where I just drew that red line. That is the break of structure. And how are you going to draw the number two, or the supply and demand zone? Is draw the zone where you've seen the market pump up, pull back, and then do this, right? And we just successfully just did one, two, and then three, right? And that's basically what we're doing like every single week, right? So what we're now going to be doing is we're now going to backtest. We're going to go ahead and practice this system, and we're going to go ahead and see how we can find liquidity, how we can find unhealthy movements, and how we can really just find our setups and really see how we can position ourselves in these charts. And let's do this. Let's go back in time. So let's time travel. All right. So let's go to Thursday. Yeah, let's do Thursday. Awesome. So let's do Thursday. So here we go. Now, this is what you're going to be doing when you jump onto these charts. All right. You're going to be finding the direction, right? Where did the market go? Where's the market going to? Where is the market coming down? Is it going up, down, sideways, whatever the case is? But what you're trying to do is you're trying to trade in the moment, right? You're trying to trade something where you can find a way to go from here and then to a supply zone in here. And then maybe you can reject that to get down here, whatever it is, right? Because what you're doing is that you're trying to figure out, is the market inside of a demand or supply? Okay. Supply, remember, it's at the top. So in this case, would be something like this. Bottom would be at the bottom here, demand. And that's what we're looking for. So what I'm going to do here is I already hit the replay button, and now we're going to figure out if the market's going up or down 3 days. So here we go. In my notebooks, in my notes, whatever, I can say, okay, IWM here has been going up in the last 3 to 5 days now. Okay, so we can clearly see that. So right now it's Wednesday, and what we're trying to find is, again, the direction, and we have already found that, right? So if you look back the last 2 to 3 days, 4 days, 5 days, we can all say that it's just been going up. Awesome. So now look at this. What we're going to be doing, I mean, if you can go this extra route and just say, well, let me do this. Let me go on my screens. Let me go to my charts and let me mark out those highs. Okay. So look at all those green lines that I'm marking out here. So break a structure, break a structure, break a structure. And if you also have any questions, please leave the questions in here so I can answer that at the end of this training. Okay. So if you have any questions on whatever I'm going over right now, leave them, and then I can, touch that topic at the end. So let's do this. Boom. Okay, cool. We keep breaking highs. We keep breaking highs. And there you go. So it looks like the market is breaking highs on this 30-minute time frame. But again, it's not enough for me to find a day trade for the morning. So look at this. So what I'm going to do now is I'm going to now go to those lower time frames and figure out, will this continue pumping and pumping and pumping, or will this come back down and tap into deeper demand areas? Let's find that out together, because I don't know if it's going to pull back on this day, or I don't know if it's going to just pump up that day. But right now we're going to jump into that into Thursday, because yeah, that's the time frame that we're going off of. And let's go to a 15-minute time frame. So now all I'm doing here is just trying to figure out, are we going to hold above this green line and just see, are we going to make new highs, or are we just going to pull back? So let's do this. So yeah, the next candlestick will be Thursday, and that's what we're looking for. But let's do this first. Let's look on this current run-up. So on this current run-up, we can clearly see that the market is, yeah, making highs. But what we're trying to do is we're trying to find areas of imbalance. We're trying to find areas of gaps, areas that have liquidity. And I'm going to mark it here just for a quick second. Okay. So let's do this. If I'm looking at this high, where did this high come from? This high came from the area where it gave you the most recent pullback. And how do you know if it's a recent pullback? Find the bearish candlestick, or find where the market dropped that caused that new high. And that happened right over here. Okay. Right over here. You can clearly see the market was kind of consolidating, but then out of nowhere, market started to pump up. Okay. So now what we're doing here is that we already figured out it already broke structure. Okay. It already broke structure. But now what we're trying to find is the demand. And so the way that we're going to draw this demand zone is from the bearish candlestick, right? Just like this. So we're going to mark this green. but still, the job is not done here yet. We're trying to see how can we get more of a refinement, meaning that can we get a deeper pullback into this demand zone, but where exactly? That is why we're using liquidity and imbalance, because we're trying to find areas where it has like equal lows, triple lows, or just areas that have gaps. So me looking at this, there is a small area right here that there is an open piece, right? So if you look at this, this wick did not fully mitigate this candle. So what we're going to do now is we're going to do something like this. And you can see that there is a gap in between from this wick into this wick. All right. And that's only on the 15. And I'm not saying that, yes, it's 100% going to come back down to here. But if it does see a pullback on the next candle, which is Thursday, it's going to come back down into here. And we're going to be waiting for a bounce. So now let's do this. Let's go to a 5-minute time frame. Awesome. So now look at this. We see more of like what's going on. And right now we're seeing that this is the most recent high. Okay, let's keep it simple. I'm trying to keep it very simple for you all. And we're trying to like really break this down because we're trying to see how can we get a trade in for this Thursday. So Thursday, we'll start right here. All right, so that's where the candle, or after the candle crosses this line, then that's where the day begins. So it's either pull back into this green zone or just blast above this high, and we can confirm that the market just wants to pump up and we can use new levels. So let's go about it. Did the market gap up? Let me know in the chat. Did the market gap up here? Let me just remove this. You tell me, did the market gap up? Yes or no? Yes. Okay, awesome. Yes. The market did gap up. So now what we're going to be doing is draw the next demand zone. The same way that you just did it over here, or the way I just did over here, is the same way that we're going to do it here now. So we're going to do this. This high is what made this low. So we're going to do this. Draw the high that made this low, that made that new high. And now we're just trying to figure out, is the market going to pull back into here or just continue pumping? So we're still going to mark out every single detail that we see live. This right here is 9:30 a.m. That's the first candle that has, appeared. But let's just see how that 5-minute candle closes. So we have an open gap, we have a demand here, and we have a current high. That's all we're trying to do. We're trying to see if we can get an upside, but we need to see some sort of pullback before finding the entry. So we're going to wait until it happens. So let's just see. There we go. So now, can the market now fill that gap? Who knows? I don't know. You don't know. We all don't know. But that's why we're here sitting together trying to figure out what are going to be the next steps. But we can use gaps, imbalances, just like those open pieces that you see in the chart, just so we can see what most likely could happen. And it looks like the market wants to come back down and fill that in. But remember, we have already applied the 1, 2, and 3. Where did the market break? Right? Where did the market break? Right here. Where's the new high? Right here. Where are we trying to find the pullback into? Right here. Where are we trying to confirm it? Inside here. Where are we trying to take it up into? Right here. Okay? You can see that we're just repeating those 3 steps, right? Or we're trying to apply those 3 steps right here. So let's do this. And let's just be patient, right? So remember what I always say, let the market come back to you. And if you let it come back to you, then hey, awesome. That's great. But remember, it's all about being patient, just letting the market develop more setups or more information, more candlesticks, so you can decide what is going to be the next step or what is the best next step for you to take. Okay. All right. So the market wants to do something like that. Okay, cool. So now look at this. Right now, looks like market doesn't want to fill in that gap, right? Market doesn't want to fill that gap. It's removing itself from that gap. And so hear this. What I would say, based off this situation here, because every day is going to be different. Every day there's going to be a different situation. Every day is going to be a different challenge. But now the challenge is that, well, we had demand here, but it never came down to the area. Okay, let's do this. Let's like kind of like, it's still there, but I just changed the opacity behind it. Because now we're putting more of our focus into this zone here. And now we're trying to see if we can play with this current momentum right here. Okay. And that's what we're trying to do, because now it created a new demand zone right here. But they're both valid. Okay. But don't get me wrong, they're both valid. But if it pulls back into here and I enter here, it can kind of be of a more of an aggressive entry or aggressive play just because it can do something like this. And I've seen it do it many times. This runs up and then it quickly just snatches right back down again. And then it just starts flying up to the upside. So what we're trying to do is we're trying to be very cautious and we're trying to be very careful when we are trading or when we are going to place a trade. We know what could happen or the potential outcome. So let's find out here. Missed it by a little bit, I believe. And we're looking for that retest, right? So let's go back. Let's see. Nothing, 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 nothing. We're waiting. Nothing. Okay, cool. So now look at this. It's the same exact thing. If the market did not want to retest into this demand zone and we are removing ourselves from this gap, this is what I'm going to do. Change the opacity. And now focus on the next thing. Let's move the zone. You can see that all I'm trying to do is flow with this move and look for that retest. But that retest should come, very soon here. Maybe not. It may never come at all. And this is where, again, discipline has to kick in, because if it doesn't pull back to your level, then you're just chilling, right? You're just waiting. So on this 5-minute time frame, there's no entry. There's no entry. So let's put play and let's just see if we can get a retest. No, not yet, not yet, not yet, not yet. Okay, cool. It looks like the market is now pulling back, but again, there's still no retest, right? There's still no retest. But at the same time, we're looking at imbalances. We're looking how liquidity is being formed. And let me just draw those out real quick. There's imbalance in here. And remember, we all seen an imbalance. We've seen where the market pumped up, or we've seen where it just dropped very impulsive. Here in this case, it pumped up. So that means it's an imbalance. And when you see imbalances, just like the way you see here, the market kind of just does this. Fixes that a little bit, but sometimes you're going to get this and then fly, or sometimes it's just going to stop here and then fly up to the upside again. So that's where it's just kind of like consolidating, and we're just trying to figure out like where is the best opportunity to look for. And that's what we're doing, looking for an opportunity. So we're going to do the next step. So it's the same thing. 5-minute demand. We're going to write it. We're going to write down our notes. Imbalance right here. The current liquidity is up here. And remember, every time when the market makes a new high, that is the new liquidity. When you see a pump up like this, it makes a high and pulls back. This is the current liquidity. Okay. And if you're looking for a pullback into here, you might be like, well, what is the liquidity that I'm trying to target? This here, right? So let's just see what happens. Nothing yet, nothing yet. So now we're forming more liquidity at the top, and now it's trying to run up. So again, liquidity is up here. So let me just write that note down. Liquidity. Awesome. Okay, cool. There we go. Now the market's pulling back here. So we're going to wait and see if the market can see this retest. And we're looking for a setup. Nothing yet, nothing yet, nothing yet. Oh my goodness, what is this? Okay, okay. All right. So cool. So I'm just playing this out because even though that, yeah, this is coming all the way to like 1 o'clock, 2 p.m. I mean, I don't think that you're going to sit on these screens all day just to watch this, play out. But I'm just, giving you like an example, like how would you go about this? And look at this. All you're trying to do is just find a retest and trying to get yourself or prevent from you entering into a consolidation. So let's just see. Okay, there we go. Nice. So now the market's coming into this demand zone. So we still have liquidity at the top. Imbalances has been cleared. So this is what you're going to do. Cleared. So write that note down just like that. Cleared. So there's no more imbalance. So we can say we can cross this off just because this has been completely filled now. And now we're hitting that demand zone, which is where we're at right now. So in here, we're still trying to figure out, will there be buyers stepping in? Will there be enough buyers for us to, take it up to the upside? And if we start breaking below this demand zone, then it just sounds like the market's now shifting right back down to start seeing new drops. And we could take out liquidity here, and maybe these imbalances that we had before. So again, there is reasonings why these imbalances and these gaps get filled or get created and filled later. So look at this. So next, I'm going to wait and I'm going to be patient. I'm trying to see if the market's going to bounce off this demand zone and see if we can get the entry. So we're doing the last step, which is we're trying to confirm the demand. Okay, awesome. So look at this. Market is now bouncing. And when I see a bounce like this, I would take this. Like I would really take this just because we have liquidity at the top here, clean demand zone. And if I were to enter this, my entry would be like right above a wick or a body of the previous candlestick, stop loss under there, and I'll go about it just like that. But when you're entering, you still have to include like your risk size, your risk tolerance. What is your account balance can be like willing to take? Or how can your account balance afford this trade? What could it afford? Is it $50? Is it $100? Is it $200? Is it $2,000? Or is it $5,000? Right? How much money can you put on the table? But even when with this account or this risk, you can put stop loss on each single investment. So I don't think that you're going to jump in and just come into the market and just lose 2,000 bucks. You want to put a stop loss on each, right? On each investment that you place. Or let's just say that you had a very amazing week and you can afford to lose $2,000 just because you made $10,000 in 1 week. Okay, no stop loss exists. That's fine because now if you lose $2,000, you're up $8,000, right? So let's just say that, right? So we're up $10,000, and we took this trade here, and the amount of the contracts are worth up to total of 2K, and there's no stop loss, right? Just for this example, we'll do another one, and we'll just do a no stop loss, and we're trying to see if we can flip this 2 into make probably another 2, or we could just say we could double it and make 4, right? So maybe like your goal is to take that 2 to make a 1-to-1, which would be a 2,000, or a 1-to-2 where we can just double that 2,000, and we're just entering into this play with full confidence, right? And if you have like fear or anything like that, then it just means that maybe that risk tolerance is too high, right? So let's just see what happens. So let's play. Okay, cool. Markets is now bouncing. Markets are now bouncing here off this demand. And we're just applying a strategy that we use every single time, right? So another key note that you should like have in mind is like when you enter into these setups, you just have to be ready. Don't get emotional just because you're down or you're losing. Just say, well, I know that I can potentially lose this, but I'm willing to do it, or I'm willing to take that risk, or I'm willing to lose this X amount just because I've done really, really well this week, or I can afford this because the last two to three trades will still cover this loss, right? That's like the way to think about it. So let's put play, and our goal is to take out like either these top liquidities or maybe for like the 1-to-1 or 1-to-2, whatever it is. You can mix and hybrid both, which is stop loss or not stop loss, but TPs and the 1-to-1 or 1-to-2. So what you're trying to do is you can do this. You can go for a TP, and that TP is going off of a level, and that level probably equals like a liquidity point, and that's the red line that I just marked out. And you can go off of that TP plus your RR, right? And that could be your main target, okay? Your main target. Awesome. So you can just see how we're combining all three: structure, supply and demand zones, confirmations. But when you're entering to these demand zones, you're trying to target a system, or you're trying to use a system and targets your TP plus your risk reward, and that's going to equal your main target. But of course, you're still putting a around this, right? So let's play this out and let's just see what happens. Let's see. Okay, let's see. Market. It's cool. Price is now going down, and we take potentially the whole $2,000 loss, and this doesn't go the way that we wanted to go to. Great. So let's do this, and let's just let this play out. Well, market wanted to drop, and now it's consolidating, and now it just pumped right back up again. Things like that is going to happen. We've seen it this week. We've seen it last week where markets drop below a demand zone and then out of nowhere pump right back up again. So when you see things like this, you just have to reset. If you're still trying to trade, or if your account is willing to let you do that, then you can still mark up those charts. So now, if this demand zone has been broken, will be the next step. This will be the next step. Find the break and find the low. The low started right here, but find the previous candlestick that broke that structure, which is right here. So look at this. So now we saw that this made lower lows, lower highs, lower lows, lower highs, and lower lows. Did we do anything wrong here? No, we didn't do anything wrong. We followed the steps. So now let's just say, well, I can still trade and see how I can put myself into the market. So market went from bearish back up to being bullish, and we're going to do the same exact thing. We'll draw the next demand zone, just like this. And when you're drawing out these demand zones and it doesn't go your way, don't feel like you did anything wrong. It's just the market chose something else. And this could possibly work right here, this one. But at the same time, you're still applying risk. You're still putting a stop loss, and you're still going within the move. And if this is the move that wants to take out the liquidity now, then amazing. You just hit a home run. So it's all about keep trying and trying and trying. But I'm not saying keep trying until you blow your whole account. I'm saying try to until those numbers start meeting with your with your risk rules. So let's do the same exact thing. What I'm going to do here is I'm trading demand zone, and I'm going to trade above a bearish candlestick, and we're going to retry again, and let's just see. So let's see what happens. Cool. Didn't cross above that bearish candlestick, and now we can lower that entry, and we're going to wait for a candle to break above. There we go. Nothing. Market just dropped. We didn't get a break above a bearish candlestick, so there's no entry. Because what we're trying to do is repeat the same entry that we did here over here, but it didn't give us that move. So now we're going to do this. Let me just delete these notes real quick. Can I do it? All right, awesome. And now here's the thing. You have to look back into your notes and see where were there imbalances, where is there liquidity now, because the market changes every single minute or every single hour or every single day. So the thing is like, why I really stress for students to take their notes is just because it's like, if nothing here worked and you're like, well, let me zoom out just a little bit. We still have liquidity here still. We still have liquidity here still. And we still have an imbalance here. There's a missing gap or there's a missing piece right there. Does the market want to take out that gap? And that's the question that comes into your bias or your analysis. Because you're like, I already tried to go up twice. One of them was a loss. The second one, I didn't take an entry because I didn't get the confirmation. And we're trying to figure out like what's going on, but we see a gap right here. So now, if this breaks down here, that'll be the next break of structure. We'll find the next pullback and we'll look for the next drop. So let's do that together. So let's clear this out real quick and let's do this. So find the break of structure, cool, right there. Find the next break of structure right here, cool. And then look at this. This is the current low, but look where it shifted. Again, there was nothing wrong with that shift, and that was valid, but there was no confirmation to enter for upside, and now it shows the downside. So now the market's now shifting right back down. So every single line that you see me mark out here is liquidity, is liquidity, is liquidity. Same thing up here. Those highs up here is liquidity as well. They're just swing points. But now we're using other things like gaps to see where does the market want to get or drag itself into. So we already have liquidity down here and inbounds down here, and it looks like the market just wants to drop. So let's find out. Okay. All right. Nothing yet. Nothing yet. Nothing yet. Price just hit a supply zone just now. So technically still bearish. So we're just trying to find A1 setups. And when I say find A1 setups, that just means that we're looking for opportunities. Do you have to take every single opportunity? No. But right now there is an opportunity here, but you want to see if you can get that best confirmation as possible. So let's do this. Let's see if we want to drop from this supply zone. No drop. No drop. No drop. Let's delete it. Let's delete this. And looks like the market wants to U-shape right back up. And that's totally fine. And we're going to see if the market wants to shift, we'll shift with it as well. So again, you're on a very low time frame. And when you're on this very low time frame, things can be different in any single minute, or it can just change its direction at any given moment. So that's why we're using these lower time frames, because we're trying to find a quick outcome. So this is Friday, 11:30 a.m. Awesome. So this whole morning is just upside, upside, upside. Okay, cool. So now look at this. So at 11:45 to 12, we have officially broken structure, right? We have officially broken structure. But now the thing is like, where can the market come back down into? So let's find those two key points, or those two key things that we just mentioned. Liquidity plus imbalance. All right, those are the two things. So hear this. Liquidity is just the current high or the previous low. The current high is up here. So that's the liquidity. Okay. So we'll mark that out. We just marked it out right here. Liquidity. So now the next thing is find the imbalance. The imbalance lays over down here because there's an open piece. Imbalance, because that's where the market just shot off to the upside and it left a little imbalance in here. So what we're trying to do here is we're waiting for the market to come back into a zone. And on that zone, we want to see if we can get that bounce. So let's do this. So we're waiting, we're trying to figure out if the market's going to take out that liquidity or just drop into that demand. Okay, awesome. It took out the liquidity point. So we're going to do this. So liquidity has been cleared, and we'll put an X. Cool. That's still a break of structure, but now it's the same exact thing. Market made a new high, right? Made a new high, but now we're looking for the demand, right? So demand will be right here. So why do I say that? It's just because, again, it's the same exact thing. It's the same exact thing what we just did all the way down here. But still, when you're looking at these upsides or trends, you still have to figure out, like, what if we cleared out this liquidity, but now what is the next liquidity? There is liquidity being built up down here. So we're just trying to see if the market were to come back down to demand zones and it's right here, but we know that there's liquidity down here, then that could just mean something. It could do something like this and sweep that out later on. So again, these demand zones are valid. I could put one here and I could put one here. But at the same time, I got to be very careful because there is liquidity that was being built up here, because at any given minute or any given moment, liquidity can be created all over the place. So let's do this. So right there, look at this. Market came down to the demand zone. This could have been a quick entry, but then now it's falling right back down. But now you're like, wait, what? Why is it falling down? It's just because liquidity. And could 100% get there? I'm not saying that. But what I'm saying is that there is, yes, buyers can get trapped in here. Market did pump, but now sellers want to take this down just because they see liquidity right there. So let's just see what happens. So let's see. Cool. There you go. Now, does everyone see how that worked? Let me know in the chat. Does everyone see how that played out? Yes, no. How the liquidity swept out here, but also how the liquidity got swept down here. But even though that this demand zone was valid and there was a nice reaction, does everyone see how the market, used that demand zone, ran up, but the sellers came out of nowhere and smacked it down and took out this liquidity point? So again, we're still using the 1, 2, and 3. And this is the most simple way to look at the market. The structure, the supply and demand, and the confirmation. But now we're using liquidity and imbalance to filter out the opportunity. And the opportunity is what equals the money, right?